Hey everybody, Banana here. We're gonna go through a Ride the Nine understanding, really looking for prevailing trend. In order to find prevailing trends, pretty easy. You can utilize various estimates from different time frames. The goal is to figure out what your specific ticker is utilizing in order to benchmark its progress during normalcy. So today, for instance, is July 17th. We had a pretty decent day of gains on SPY. And we want to figure out the prevailing trend so that we can utilize that as a breaker or stop loss or a indicator that things are changing, that we have a change of character. So in order to figure out the prevailing trend, first we need to start with an SMA. So right now I have my 5-minute SMAs plotted out here. And as you can see, it's pretty choppy with the 5-minute SMAs. There's not, a clear single direction. There are some ride the nine opportunities that you can see in here. There is very little loss of it on this gap up here that we experienced at around 11:30 New York time. Had some difficulty in the morning, other than a nice big jump up, and then you bounce down and then rolling. So what we can do though is let's see if we can find the prevailing trend. So I'm going to use my Trend Rebel Pro SMA indicator. I'm going to go to the settings. I'm going to move this off to the side so we can still see that. As well as the screen here. And you'll notice I have my 5-minute plotted right now. I'm going to make these, excuse me, these lines a little thicker, and I'll show you why. So the white is my 5-minute, and again, right here, I have all my SMA colors so that you can see what they are. In case you ever have a question with what I'm doing, these are my SMA colors right there. Our white is the 9, obviously. I'm going back to, going to open this back up again, set it over here. So what I want to do is figure out what prevailing trend is. So we started with a 5-minute SMA, and that 5-minute SMA didn't really work out for me to find prevailing trend. Prevailing trend is really something where we have kind of steady progress, and you can see support from that trend going there. So I moved it down to the 15. I went from the 5-minute to the 15-minute, and as you can see with this 15-minute here, we have a really strong presence here. So as SPY kind of comes up and bounces, etc., we don't lose the trend here with the 15 at all. We have one potentially suspect candle right here at 11:25, and again, this was that place where you could have rode the 9 up even on the 5-minute. So that's kind of an outlier right there. And when you get better at price action, you'll learn to differentiate between piece or not. But if you wanted to play by the rules strictly and you want to find a prevailing trend that sticks fully underneath it, pop one more down. Let's see what we get when we look at the 30-minute. So 30-minute is looking very nice. So this 30-minute is showing us that all the way, if we use this 30-minute all the way through, we would have no interference whatsoever with trend being able to support us through the trade. So that's how you find prevailing trend. Now, how you use prevailing trend is you can use that to basically as a support as you go through. So the continuation of the prevailing trend, which won't work for us now because we will probably gap up or down tomorrow morning. So that won't give us the outlook that we need to continue to go. But what you can do is you can flip through these different indicators or different time frames for your SMAs in order to determine where prevailing trend is so that you can actually set a safer buffer for yourself so you have a little bit more confidence in what you're trading. This is all to be used with a ride the nine strategy. You can use this with other strategies as well, but really a simple one, easy one to get into. Flipping through those on different charts. Once you get an understanding of an indices prevailing trend, you can start to apply that to other tickers. You can utilize that even on stocks or crypto, etc. You can try to see where you have some similarities in there going on, but mostly what we're trying to do is make sure we have a excuse me, a safety net that's going to carry us from entry to profitability without actually losing any ground here. So in this case, we have the 30-minute is our prevailing trend. However, when you understand price action a little bit, you probably would have used the 15 and let that settle in for a second, only because it gives you a little bit more motion. So the smaller the time frame of the prevailing trend, meaning we went from a 15-minute estimates. So the 15-minute is smaller than the 30-minute. It's in a smaller time frame. The smaller it is, the more reaction you're going to get. The bigger it is, the slower action you're going to get, unless you have a massive dump somewhere or something happens like that. But most of the time, prevailing trend will carry you always on higher time frames. So I'll give you an example. We saw the 30 before. Let's go look at a 4-hour prevailing trend. So this one will be interesting for you because you'll see that everything is going to be encompassing. See, it's not even on the screen. It's just drop down here. Let me come up a little bit. Let's just go to a hourly, which should be mostly on the screen here. So on this hourly, you can see that's there, but we have a big gap here, right? So big gap here, we're trying to separate between that, and we don't like those big gaps because it gives us a lot of downside when we enter. So we want to look at when when we're going to enter with a prevailing trend, we want to be close to it as we can. So 30-minute is okay. Again, you have a good entrance if that 30-minute continued on right where we are right now, right where we closed the day. However, early on in the day, maybe carried over from yesterday, it would have made some sense there, which is why I kind of scoot back down to the 15, where you have a clear entry in the beginning of the day. You've got a second point of entry at 11:30 Eastern time right here, and you have a third point of entry here at 1:25, and a fourth and fifth over here. So kind of bouncing around as we continue to groove on up. And then I just want to show you what happens when you go too low with a prevailing trend. It's no longer the prevailing trend is what happens. So here's the 1 minute is going to pop up in a second here, and you can see the 1 minute, it's just following the candles. So this 1 minute is just candle to candle, scooting on through here. You cannot use that to trade with because it's interfered with there. You have to use a time frame that is higher than the time frame that you have on your chart. So this is a 5-minute chart, so I have to use either the 5-minute or better. So this 5-minute you'll show me it's really tight. See, that's really too tight for me. I can bump up a little bit to the 15, and that's where we get kind of the really nice action there. So that's how you use prevailing trend. The other thing you could do is you don't have to use the 9. You could use a 20. So for instance, we could drop down to the 5 again, and let's see how that 20 carries us. So that 20 is not the prevailing trend because we can see clear punctures through that there. And you're not always going to have a prevailing trend either. But when you look at the 15, you've got that 15 right there. You've got the 15-minute 20, which is actually better than the 30-minute 9, but it's still a little bit far away from price action. So key to getting the best prevailing trend to keep you in the safest spot and to give you the best entries is find the prevailing trend that is closest to price action without losing a lot of candles underneath it. So the fewer candles that penetrate your prevailing trend line, the better and stronger it will be for you to get into and to get out of. So you want it as close as possible to the gap there, and I think we found it here on this 15-minute 9. It looks really strong to me, and that's what I would use for a ride the 9 strategy, trying to insert a prevailing trend. Now, why am I doing this right now? We've never talked really about prevailing trends here and there, etc. The reason we're talking about prevailing trend right now is we are in a melt up. Trend Rebel has kind of shown us the path that we're going to get. There are potential dip opportunities as we're going through this, but most of the time it's going to be this really boring melt up that we're going to have to navigate in order to generate profits. And to do that, we have to treat price action differently. We really have to rely on some tools here to keep us from jumping in and out all over the place and keep us going longer term. So this is one of those tools that you can utilize to keep your prevailing trend going. That's all I have for this video on prevailing trend. I appreciate you guys stopping in here, and I am Banana. I will see you on the trading floor.